Good morning, ladies and gentlemen. My name is Greg Michaelowski from ForexLive.com. Today's date is September 19th, 2022. Start of a new trading week. We have some of the same patterns that we saw last week. The dollar is a little bit higher. We are seeing the U.S. stock markets move lower. We're seeing interest rates move higher as well. So let's get into it. Let's take a look at some of the technicals that are driving the Forex market this morning. The UK markets are on holiday as they bury their queen today. So there is a little less of the market players, if you will, at work, especially in Europe. But the currency markets remain open. The only markets that are closed are the UK stock and bond markets and commodities, I guess, over there, stuff like that. So we are seeing U.S. stocks, however, move lower in early trading. We're seeing interest rates, two-year yield looking toward the 4% level. It's trading at the highest level since 2007, and the 10-year yield also moved to a new high for the year. So interest rates continue to move higher as the Fed prepares for their meeting, which will announce a 75 basis point hike likely on Wednesday. Bank of England meets this week, and as a result of the retail sales data last week, which were dismal, they expect a 50 basis point hike. Swiss National Bank is also in play this week with a 75 basis point hike expected. So that's what we have from the central bank standpoint. So higher rates all across the board. Let's take a look at the euro versus US dollar here as a result of the price action here today. And if you hadn't seen the weekend fake out or breakout I should say, video, you can go to our website and click on that and take a look at the week in review going forward from a technical perspective and little fundamentals as well. Let's talk about the euro versus US dollar chart right here. This is the hourly chart, and as you can see, the price moved higher in the early Asian session, but we did and could not get above the 50% retracement at 1.0303 level. The high price for the day reached 1.00285 and then started to rotate back to the downside. We have since seen a rotation back to the upside and retest the 100-hour moving average. But this area here is now our high swing area between resistance at the top side and support on the bottom side. Recall the 0.99515 level was a favorite number of mine. You have to go back to the daily chart and take a look at this low right here back in July on the move to the downside, trend move to the downside. We finally found support, and we started to rotate back to the upside here, only to rotate back to the downside, and we're staying toward the lower end of the extreme. But as you can see here on the daily chart, last week we did find support buyers near that 99.15 or 51 level, 0.99515 level, and that's going to be a key level on the downside. On the top side, we have the 50% retracement right here of the range for the September trading month. In between is the 100-hour moving average, which is moving down, and we moved a little bit above it here, but could not sustain any momentum to the upside. The 200-hour moving average is another target that we need to get to and through, in addition to the 50% if the price is going higher. So right now we are testing a little bit of intraday resistance in the middle of this range, and we'll see how the market plays out here as the traders battle it out. But so far, there's no clear winner, but we have a lot of fighting going on between buyers and sellers in the range that we've defined here over the last 4 or so trading days. Let's take a look at the sterling versus US dollar. In this currency pair, we had the 38.2% retracement of this last move to the downside, which on Friday we rotated back to the upside. Also a swing area through here, swing low, swing low, swing high. Swing low here on Friday, break below, and then come back and retest that area right here in the 38.2% retracement. Couldn't get above it. And in trading today in the Asian session, we came up to that 38.2, and we found sellers against that level, push the price back down toward the lows through here. These lows that we saw on Friday did take out the low price for the year, and also if I go to the weekly chart, the lowest level since 2020 here. That took the sterling versus US dollar to the lowest level since 1985, folks. Yes, this was the lowest price since 1985, and we passed it on Friday, reaching our low price of 1.13496. So in trading today, we moved down, going back to the hourly chart, toward that low price from Friday, lowest price since 1985, and we found early buyers against the level, just because the risk can be defined and limited against this low. If the price were to go below that level, I would expect more sellers to come into the market and push the price to the downside. On the top side, intraday, on the hourly chart, we have this 114.04 to 13 level, just swing levels through here. Also, recall that it represents the low price from the pandemic here at 114.08. So this area through here is need to get back above that level, lowest level, old lowest level for the year, and the 08 level, get above the 13 level as well, which was this low through here. So need to get above that area and above the 38.2 to give the buyers more hope in that currency pair. Let's take a look at the dollar versus yen, and this currency pair over the last 2 trading days and into today is finding the going rough as buyers and sellers battle it out. Recall last week the market moved higher, and when it tested the high price from the previous week, we had the Bank of Japan come in, ask for currency rates, and that forced the market to the downside here. Since then, we've only been able to return back up toward the 143.80 level in trading on Friday. The market moved up toward that level, above the 100 and 200 hour moving averages in the process, but could not sustain any additional momentum. Came back down in trading today. We moved to a low here, but stayed above the Wednesday low from last. Actually, that's the Wednesday low from last week, and found buyers. So confined trading range here relatively for the dollar versus yen, trading above and below the near converged 100 and 200 hour moving average. In order to increase the bullish bias, we got to stay above these moving averages and also get above the high from Thursday. That would give the buyer some additional comfort, if you will, and maybe allow for risk to be increased up to this highs, or at least this high right here from Friday. Then we can look up toward this swing area here, swing high, swing high, swing high, swing high, and swing low through here at the extremes. So we look up toward that level and toward the highs. But again, we have the Bank of Japan looming on the top side. Finally, let's take a look at the dollar versus Canada as our last currency pair here. If we take a look at the daily chart, we moved above the highest level for 2022 on Friday's trade, and we are moving to a new high, going back to this date in November of 2020, end of October, early November. The 50% retracement of the move down from the high price going back to 2020 comes in at 1.33364. That remains our target on the top side. We're currently trading at 1.3310. Get above the 50% retracement, increases the bullish bias for the dollar versus Canada. As you can see, this trend line connecting a high to a high right here. That level on the daily chart currently comes in, I'll get it, it comes in at around the 132.75 level. That's going to be a level that we need to get to and through on the downside in order to give the breakout buyers here a little bit of a problem, I guess, from that perspective. This is what it looks like on the 4-hour chart. Not much different from the daily chart. So let's watch the 132.75 level on the downside for just an intraday, short-term level, risk-defining level for buyers in the market. But right now, the buyers remain in control. There you have it. A look at some of the major currency pairs. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.